You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 23rd day of July, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. Our first live broadcast, that's our live training room. It is reserved for members only and those who are taking our 1-week free trial, no credit card required, where you have access to not only the live training room, but to every resource that all of our members enjoy for 5 consecutive trading days. When Michael comes on in a little bit, he'll actually show you, he'll walk you through the steps of signing up for the trial. Now, you might think, well, today's Tuesday, I get 5 days, I better wait till next week. Not true. Doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial. You'll get 5 consecutive trading days with unfettered access, even if it stretches over a weekend. So in most cases, the 5-day free trial actually turns into a 7-day free trial. Some markets do trade over the weekend, and you'll have access to the indicators over the weekend. All right. When that live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back at 12 noon for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's a couple different ways to join this broadcast live. Let me give you the best way first. You only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Afternoon Broadcast. Click the link, fill out the 30-second registration form, and you're done. If you did it right now, it would get you in today. More important going forward is every trading day, about an hour before this broadcast starts, you're going to get an email. And in that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're just busy doing something else. You can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, so really, all you got to remember is CFRN. Not only do we broadcast live on our YouTube channel every trading day, as we're doing right now, we're actually simulcasting on our YouTube channel and on our platform, but we also archive each and every daily broadcast. Currently on our YouTube channel, there are over 2,600 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's also a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. And obviously, you're not going to listen to them all or watch them all. So pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, month, year. Do the same thing. Obviously, the more recent episodes are going to be more relative to what's happening both in the world and in the markets right now. youtube.com/CFRN. Our schedule each day is we open with a daily devotional, word of prayer, share some market news with you, and then I get into a recap of the alerts, the Logic 247 alerts, the Concierge Trade alerts. Then about 12:45, 12:50, Michael will join us, give us a recap of what happened this morning in the live training room. And when he's done with that, usually by the top of the hour, we go live on the TradingView platform and we do some live trading for 30 minutes. When that's over, I'll come back. I'll finish the recap of the alerts if I've not finished already, and then I'll wrap things up with our good word for the day. So let's get going on this fine Tuesday. Now, we began a new devotional topic yesterday, the Complete Bible Answer Book. I mean, come on, everybody's got questions about the Bible, at least those who've actually read it. But what we're endeavoring to do here is to answer most of the questions you have in just 5 days. Today's day 2. If you want to hear day 1, well, youtube.com/CFRN. Today's scripture is Isaiah 53, verses 2 through 6. And I'm going to share it with you from the Message translation. The servant grew up before God, a scrawny seedling, a scrubby plant in a parched field. There was nothing attractive about him, nothing to cause us to take a second look. He was looked down on and passed over, a man who suffered, who knew pain firsthand. One look at him, and people turned away. We looked down on him and thought he was scum. The fact is, it was our pains he carried, our disfigurements, all the things wrong with us. We thought he brought it on himself, that God was punishing him for his own failures. But it was our sins that did that to him, that ripped and tore and crushed him. Our sins. He took the punishment that made us whole. Through his bruises, we get healed. We're all like sheep who've wandered off and gotten lost. We've all done our own thing, gone our own way, and God has piled all our sins, everything we've done wrong, on Him. Now, I probably don't need to tell you, but I will, because that's how I roll. This is Isaiah 53, which is the Old Testament. If you're not real familiar with the Bible, it's split into two parts, the Old Testament, the New Testament. Now, the person they're talking about in the Old Testament doesn't appear on planet Earth until the New Testament. Pique your interest? I hope. So the question is, does what we read in Isaiah 53 guarantee our healing today? The mantra, "By His stripes we are healed," is repeated endlessly in Christian circles. However, these words extracted from Isaiah 53:5 focus on spiritual rather than physical healing. First, a quick look at the context makes it clear that Isaiah had spiritual rather than physical healing in mind. Christ was wounded for our transgressions. He was bruised for our iniquities. The chastisement for our peace was upon Him, and by His stripes we are healed. Now that's also Isaiah 53, but it's from the King James Version. Furthermore, while healing of the body is not referred to in Isaiah 53, it is referred to in the verse immediately preceding it. There Isaiah wrote in Isaiah 53:4, "Surely He took up our infirmities and carried our sorrows. Yet we considered Him stricken by God, smitten by Him, and afflicted." Physical healing is not only clear in context, but it is also affirmed by the Gospels, where it is given an important qualification. Now, when I speak of the Gospels, I'm speaking, of course, of the New Testament. In Matthew 8:16 through 17, we read, "When evening came, many who were demon-possessed were brought to Jesus, and He drove out the spirits with a word and healed the sick." This was to fulfill what was spoken through the prophet Isaiah in the Old Testament. Thus, the healing Isaiah spoke of was fulfilled during the ministry of Christ. But his prophecy does not guarantee healing today. Finally, I should note that in a real sense, Christ's atonement on the cross does extend to physical healing. In Revelation 21:4, we read, "One day there will be no more death, or mourning, or crying, or pain, for the old order of things has passed away." However, as Paul pointed out in Romans 8:25, we hope for what we do not yet have, but we wait for it patiently. And as we wait, we will all experience sickness and suffering. Indeed, those who live before Christ returns will all die of their last disease. The death rate is 1 per person, and we're all going to make it. Join me in a word of prayer. Heavenly Father, come before you today with humble hearts, reflecting on this profound truth in Isaiah 53. We thank you for the suffering servant, Jesus Christ, who grew up like a tender shoot and took our pain and bore our suffering. Though he was despised and rejected by mankind, he carried our sorrows and was pierced for our transgressions. Lord, we are deeply grateful for the sacrifice he made on our behalf. For it is by his wounds that we are healed. Help us to always remember the depth of his love and the price he paid for our redemption. Strengthen our faith and guide us to live lives that honor his sacrifice, sharing his love and grace with everyone around us. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow up 78 points, the NASDAQ up 79, S&P 500 up 14, the Russell 2000, our man in the street, is up 22 points, just over 1%. And in the commodity basket, crude oil down $1.75, trading 76.67 last. That's a drop of about 2.25%. Gold up $10.70, trading 24.0540 last. Silver down a nickel, trading 29.27 last. In the Asian markets at the close, the Nikkei only fell 4 points today. I mean, it's down thousands of points over the past week, but today, maybe it's turning around. The Shanghai dropped 48 points, and for the Shanghai, that's over 1.5%. The Hang Seng fell 166 points, which is just shy of 1%. And in the European markets at the close, FTSE down 31, the DAX up 150, almost 1%, and the CAC down 23. So we had a red day in Asia. It was a mixed day for the UK. And at the moment, it is a green radio Tuesday here in the US of A. Let's take a peek at the news. How many of you use Spotify? How many of you own Spotify? Well, Spot, that's the symbol, S-P-O-T, reported their second quarter earnings this morning and beat expectations as the audio giant posted record profit, gross margin, and free cash flow in the quarter on the heels of its recent efficiency strategy. Revenue came in, they bought out Anchor FM. Revenue came in line with estimates, while monthly active user metrics disappointed, both of which investors shrugged off as the stock surged more than 10% in pre-market trading. In June, Spotify announced it would hike the prices of its premium U.S. subscription plans, with increases set to take effect this month. Spotify also raised prices last summer. You can see what they're doing, right? How much will the market bear? That's not uncommon in business. You slowly raise the price, and until your gross sales start to drop off, then you back off the price. On top of price adjustments, the company has committed to multiple rounds of layoffs and initiatives to boost top-line growth and improve margins, like a music-only streaming tier and an audiobooks-only plan. It also introduced a higher-priced audio bundle that includes music, podcasts, and audiobooks. Elon Musk in the news, stirring up some questions about where big American companies should put down their roots. A new California law, the first in the nation to ban schools from informing parents when their minor children change gender identification, prompted the billionaire this past week to announce that he would relocate both social media platform X and rocket maker SpaceX to Texas. That came roughly 1 month after he won shareholder approval to move the incorporation of his electric vehicle maker, Tesla, to the Lone Star State from Delaware, after a judge in that state invalidated his $56 billion pay package. Texas is embracing its recent victories, arguing that companies in other states are gravitating to its lower taxes and friendlier regulations. And by the way, Elon got that payday. Shareholders approved it. How about that Coca-Cola? You still drinking Coca-Cola? Now, you know it's bad for you, right? Yeah. Well, when they first made it, it had cocaine in it, so I guess it was really bad for you. But now it's bad in a much different way. Now I'm talking about your health. So let's switch to your wealth. Coca-Cola held on to its momentum to deliver another bubbly quarter this morning. The soda giant beat Wall Street's estimates in Q2, led by global demand for its beverages despite higher prices. Revenue grew 3% to $12.4 billion compared to the expected $11.76 billion. Earnings per share came in 7% higher year over year at 84 cents compared to estimates of 81 cents. Now, let's talk sugar. Do you know how much sugar is in one can or bottle of Coca-Cola? I want you to Google it. I want you to see it with your own eyes. It will blow your mind. And then I want you to say, compare the addiction, I want you to Google this, compare the addiction of sugar to heroin. See which one comes out on top. And by the way, the price of heroin is down substantially. Just saying. Now, how many of you have ever participated in some kind of medical trial? You know, there's big money in that stuff. In fact, 24 patients are worth billions in pharma's hot market. The 25 people in Roche Holding AG's obesity pill study would barely be enough to fill both sides of a soccer match. Yet their weight loss their combined weight loss added $16.8 billion to the Swiss drug maker's market value in a day. Only the latest in a series of big share moves based on success in tiny trials. Now, any medical professional will tell you that you cannot do a proper study with only 25 participants. I think the bare minimum you'll find in the medical journals is 100. But positive results in the earliest stages of development have driven about $93 billion in market value gains this year for all obesity drug makers, according to Bloomberg calculations. The optimism is due to the size of the obesity market, with shareholders buying into a chance at even a small slice of a pie that Goldman Sachs says could reach $130 billion by 2030. Now, those kinds of numbers are not in play for experimental drugs being developed for other types of diseases. Everybody wants to look thin and pretty and young, right? Forget the fact that the sugar's killing you that you're washing those pills down with. Meta just got a reality check. Actually, not the kind of check. Do you remember when people used to write checks? Not that kind of check. It was a different kind of reality check. Nearly $50 billion. In just over 4 years, Meta's Reality Labs division, focused mainly on its products in augmented reality, virtual reality, and the metaverse, has lost as much money as the market caps of Snap and Pinterest combined. Insiders say that the staggering cash burn is not the price of innovation, but rather the result of a chaotic culture that features frequent reorganizations and installation of top leaders with zero AR or VR expertise. With Meta CEO Zuckerberg warning that operating losses in Reality Labs will only continue to increase meaningfully. Yahoo Finance spoke to a dozen former high-level employees, mostly executives or managers across multiple segments, including engineering, research, product management, hardware, content, and operating systems, who say the lack of a clear vision and mismanagement are largely to blame for this burn of $50 billion. A little bit freaky, huh? How about that crude? You know, we get inventories tomorrow, but the news today is oil fell for a third session as futures hit key technical levels, spurring a bout of algorithmic selling amid low summer liquidity. West Texas Intermediate, WTI, dropped as much as 1.6% to trade near $77 a barrel, the lowest in 5 weeks. The decline was propelled by algorithmic traders dumping their bullish positions after futures surpassed both the 50-day and 100-day moving averages, which have acted as support levels. Oil is approaching oversold territory on the 9-day relative strength index, suggesting a reversal may be imminent. Those of you that trade options, you should talk to Michael, you should talk to Bert, because there could be a real opportunity here. Crude prices remain higher year to date, helped by OPEC plus supply cutbacks and expectations for lower U.S. interest rates, perhaps as soon as September. Political risk remain front and center as investors weigh the implications of U.S. President Joe Biden dropping his re-election bid. Because we all know, if the Donald gets back in the Oval Office, what's going to happen on day one? Drill, baby, drill. Google is dropping plans to eliminate cookies from its Chrome web browser, making a sudden U-turn on 4 years of work to phase out a technology that helps businesses track users online. You know how those little, like you do a search for red shoes or red tennis shoes, and you get your results and you look at it and you say, okay, that's fine. Then every website you go to, there's an ad for red tennis shoes. That's the power of the cookie. And the fact that Google is going to drop that, I'm very surprised. The company has been working on retiring third-party cookies, which are snippets of code that log user information, as part of an effort to overhaul user privacy options on Chrome. But the proposal, also known as Privacy Sandbox, has instilled fears in the online advertising industry that any replacement technology would leave even less room for online ad rivals. In a blog post yesterday, Google said it decided to abandon the plan after considering the impact of the changes on publishers, advertisers, and everyone involved in online marketing. They caved in one day. Unbelievable. That was a waste of... That's 5 minutes of my life I'll never get back. NXP Semiconductors, trading under the symbol NV, fell the most in 4 years after its third quarter guidance disappointed investors. The Dutch chipmaker predicted revenue of $3.15 billion to $3.35 billion in the period ending in September. The company said Monday in a statement, the midpoint is below analysts' average estimate of $3.35 billion, according to data compiled by Bloomberg. I got one last little bit of news. Hey, I posted in the Breeze channel a week ago a podcast from Planet Money about the dark side of solar. If you maybe you don't use the Breeze channel, just Google the dark side of solar podcast. It'll pop right up. The Planet Money website will pop right up. It'll take you right to the podcast. You've got to hear this. Whether you already have panels on your roof or you're thinking about putting panels on your roof, this is going to curl your toenails. SunPower Corp plunged to an all-time low after the solar company told dealers it would no longer support new installations and was halting shipments. They are essentially saying that they're just not able to continue operations. Now, the guy that comes to your door, young, fresh-faced, nicely dressed, he's got a pitch that's going to put money in your pocket. But once that thing gets installed and you sign that contract, you can't even get him on the phone. Now, I'm sure there are some good solar companies out there. In fact, they point this out in the podcast, okay? But the majority, well, why do you think they call, why do you think the title of the podcast is The Dark Side of Solar? All right, moving on. Telling you, you really want to listen to that. Because it has so many implications beyond the solar industry. All right, Logic 247, that's our 24/7 around-the-clock E-mini alert service. Not just E-minis, it's also crude and gold and silver and euro and bonds. We're in week 312. Now, over the last 312 weeks, we have published over 17,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure. And a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. As of 12 noon today, since the market opened Sunday night at 6 p.m. Eastern, we've issued 42 logic alerts, 4 never triggered. Still waiting on the outcome of 17. That gives us 21 actionable alerts, of which 3 or 14% would have been stopped out, again based on market structure and that simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now the logic alerts, they've got an entry price, they've got an initial target that's designed to help you get your goal for the day, and then often additional targets, and then a final trade to target. Now the purpose of the alerts is not for you to just trade them so you don't have to learn how to trade. They're a tool I created to help you learn how to read the chart, because until you can read a chart fluently, you'll never learn how to trade. Talk about putting the cart before the horse. I mean, imagine all the traders out there all over the world. They want to trade. They're desperate to trade. They've been trying for years without success. Why? Because they're following some goofy guru or some half-baked alert service. And no one has ever taught them how to read a chart. You read a chart the same way you read a book or a newspaper, mystery novel. But the books and the newspapers, they have words and sentences and paragraphs and punctuation. In the financial markets, you read a chart much differently. And that's the purpose of the logic alerts. I give you the information before it happens, and then you use that information to learn how to find the entry, the initial target, the additional targets, and the final trade to target. Now, once you graduate from Logic 247, then we go to work on the CTAs. That's the concierge trade alerts. Now, Logic's been around 312 weeks. Concierge trade alerts have been around twice as long, maybe 3 times as long. But leave it to me. I put the cart before the horse. Before I created the CTAs, I should have created the logic alerts. Because without the learning, the ability to read a chart that you gain with the logic alerts, the CTAs aren't that great a help to you. Okay? So we're going to do one first, the other second. Now the logic alerts can come out anytime around the clock, 2 a.m., 2 p.m. Because futures trade around the clock, and we have traders around the globe. But the CTAs are published as a static report shortly after the Globex open. Last night, Tuesday session began at 6 p.m. Eastern, and at 6:05 p.m. Eastern, I published all of these targets for all of our members and trial members. So when we go to the charts, just remember, all members and trial members had these targets 5 minutes after the open. So what do you do when the report's published? Go to the 30-minute chart of whatever markets you actually trade. Make a note where price is at the time the report is published. It's always going to be between these two numbers on every market. Okay. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. The BBC is the green line you'll see on all my charts. Stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Now, all alerts, logic, and CTAs are created on the 30-minute chart. There's nothing magic about 30 minutes. It's just the time frame I chose many years ago, and if it's not broke, don't fix it. But you can put the BBC on a daily, a weekly, a monthly chart, a 5-minute chart, a tick chart, a range chart. But for the purpose of what we do, 30-minute chart and a daily chart. Now, this is where you get to test your mettle and see if you actually do know how to find those windows of opportunity. Because now you're looking left yourself to prove that you've learned how to spot obstacles or targets or windows of opportunity. And you also learn how price behaves at a weekly trading zone. This is important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC. It's trying to reach the weekly zone above. Price is below the 30-minute BBC. It's trying to reach the weekly zone below. Publish the zones every week for our members since December 14th of 2009. Close and end this December will make 15 years. Now the zones are published Monday morning at 6:15 a.m. Eastern. Once they're published Monday morning, they're carved in stone for the entire week. They do not change in any way whatsoever. Once you understand how price behaves around a weekly zone, zones will become one of the most important tools in your trading toolbox. Only 3 things can happen when price reaches a weekly trading zone. 70% of the time it'll be consolidation, 20% of the time rejection, 10% of the time call the slice. That's when on a 30-minute chart, a 30-minute candle slices through a zone like it's not even there. But when it runs out of steam, it will typically retrace back to the zone it sliced through, and then price will continue in the direction of the slice. Okay, here we are, ES daily chart. We're below that 38% fib extension. I posted a lot of charts in the discussion group this morning. Back here, when the step line crossed, we knew we were going to get a pullback to the BBC. And last week I kept saying, I got a feeling this time we're going to trade through. And we did, all the way to the 24% fib retracement. Now, institutional traders, the ones who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute tick charts, range charts. So what I'm encouraging you to do, no matter what you trade, futures, stocks, crypto, Forex, ETF, spend 2 minutes with the daily chart before you begin your actual trading session. In doing so, you're literally looking over the shoulder of the deep pockets that move price. Now, if you get a handle on what they're doing, then all you got to do is whatever they're doing long enough to get your goal for the day. Now, yesterday, okay, this bounce off the 20, whenever you hit a fib retracement on a daily chart, all the institutional traders see it. And so is it a self-fulfilling prophecy? We could have that discussion all day long, but we won't. Okay? We expect a bounce, we get a bounce. But we also knew where to expect resistance, the 38% fib extension. Now we spiked it today, but look where we're at. We're back to that daily doji we had earlier in the session. At one point, this was a green candle all the way up to right there. But like a shrinking violet. Now a doji represents indecision. Okay? Now what we know is with red and falling overhead, and the fact that we've already closed once below the BBC, there's a great probability that we're going to come back to test the 24% fib extension, and then the 24% fib retracement, and then the low of July 19th. And if we break the low of July 19th, we could see quite a drop down to around 5,500 and 54.53, 370, possibly 52.88. Now, you got to embrace all possibilities. What if buyers make up their mind that they're going to buy no matter what? Well, right overhead, you got red and falling. That's resistance. And the 50% fib extension, that's resistance. And the 62% fib extension, that's resistance. And then, of course, there's the all-time historic high. Okay? Telling you, if you'll just spend 2 minutes with the daily chart, you'd have had your goal early in the day because the institutional traders were buying. But they've now hit the pause button on the buy side. If they stay in pause mode long enough, then the institutions that specialize in short selling are going to come out of the woodwork and drive price down, and price drops faster than it rises. You see, it takes financial commitment for price to rise. But all it takes for price to drop is for buyers to stop buying. Now, I'm not saying they're going to stop buying forever. No, they're just going to, they're continually buying, but they're not moving price higher. So, they got bosses to answer to, and in many cases, shareholders to answer to. So they're going to pause and let price drop. Water seeks its own level. And when it drops far enough, they'll step back in. They'll start buying. Okay? All right. Michael should be here any minute. The 30-minute chart, as I said, is where all of the alerts are created. Logic and CTA. The vertical line separates today, Tuesday, from yesterday, Monday. When price rallies up to a weekly zone, we expect consolidation 70% of the time. And then up to the next zone, spiked it, came right back, that resistance held. Then we finally pushed higher, but ultimately we pulled back to the BBC. Price always reverts to the mean. In our case, the mean is green, we call it the BBC, bull bear cross. Bullish above it, bearish below it. Okay. So this was the opening candle last night. 5 minutes into the life of this 30-minute candle, that's when all those targets published. Now, blue and climbing was directly overhead, so we know that's potential resistance, because it's probably on its way to becoming red and falling, which is bearish. And so look what happened. Price came down to the BBC, the pullback holds more often than not, so we got a feeble little bounce. And we had this resistance overhead. And that resistance walked us right down to the weekly trading zone. When price drops to a zone, we expect support till proven otherwise. Support will always send the market looking for resistance. When price rallies up to a zone, we expect resistance. That's what we got. Resistance sent the market looking for support. Remember, the pullback holds more often than not, which sent us back to resistance, which sent us back to support. Now we're in a situation where we've got a red candle that is attempting, it's got 9 more minutes left in the life of this candle. It's attempting to close below the BBC. If it does, then we may see price head back down to this zone. But be very careful. You see right here, where the blue line gets above the green line, that's a bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. So, if price drops to 56.03, expect support and possibly a bounce. If price can get well below that bullish cross, say 55.99, then you got a nice 4-point trade down to 95. It only takes 2 points to get your goal for the day. And if we come through this zone and take out this low, then there's a high probability that we will continue dropping to the short target. Okay, so we've only covered one of the markets so far, the ES, but Michael's here. He's going to give us a recap of what happened in the live training room. After that, he's going to do some live trading on the TradingView platform. And then I'll come back when he's done, and I will finish the recap of all the different markets, all the alerts, and I'll wrap things up with our good word for the day.
Oops. Okay. All right, let me bring it over here. I am ready. I am ready. Here we go.
You're welcome, Chris.
All right.
All right, looks good.
Bring the questions there. My turn. All right.
Everything looks good.
Yeah. Great. All right. I'm just do one more little thing right here and make that a line. Let's see. Okay. There we go. All right. Good afternoon, everyone. Today is Tuesday, the 23rd day of July, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. It says sign up for your free 5-day training now, 9:15 to 11:30. You click on that. There's no credit card required to sign up for the trial. Just click on that and it's going to lead to this registration page. Where all we ask for is your name, email, and phone number. And then there's 5 multiple choice questions. And down here, you can give us your Ninja Machine ID or your TradingView login ID. Either one of those two things will, we'll get your indicators indicating, all right? If we know all that information, we'll be able to get your indicators indicating before you at the beginning of the trial. And that is where you really want to be. Indicators indicating at the beginning of the trial. All right, now, the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Now, we traded some today, but we ended up doing a lot of training, or I got into the training, and then as usual, I ended up going down some rabbit hole, and you know, that's just the way it worked out. So, once I started the training, I just went right through to the end. Actually, I went right through past 11:30 today. But we ended up getting 126 ticks on the MQ and -5 on the YM. We didn't trade the Russell, we didn't trade the ES. So we're plus 605 on the morning session. Today it took 7 minutes in one trade to get to the goal for the day. At that point, we're up $2,850. That was 130 tick MQ trade. And we took a total of 12 trades this morning. Right. So on the month now, we're at $7,502 over 15 trading days. And we're now averaging $500 per contract for the morning session. For those of you guys that were watching at the beginning of the month, we started out really slow, but right now this is shaping up to be our best month of the year. As far as the average goes, right? The average, I don't know, the best month of the year, dollar-wise, it's up there. We're at 7,500 right now, and that is third place right now. Third place. Well, 7,502, fourth place, but we'll be above that by the end. A few more nice days like this. I mean, it's the 23rd, and I think we have 6 business days left, right? 1, 2, 3, 4, 5, 6 complete business days left. So we could easily get up there by the end of the month, make it our best month of the year. We just have to get over 10,700. So anyway, who would have thought in the middle of the summer? On the year now, we're 7,902 over 15 trading days, averaging $500 per contract per morning session. And that's not on the year, on the month. On the year, we're at 54,587, averaging $404 per contract per morning session. Now, if you were to quit trading, following the 24/20 blueprint, quit trading when you get your goal for the day and add 1 contract per month. So far this year, you'd be on your 7th contract, and this number needed to get to 14,000 to go to 8 contracts next month. This number needed to get to 38,000 to go to 20 contracts next month. 20 will complete the 24/20 blueprint at the end of August, and this number hopefully will be over $1 million. But following the 24/20 blueprint, right now you should be trading 7 contracts, and you would have only had to work 45.8 hours so far this year, and you'd be averaging $1,575 an hour. Okay, and following the same 24/20 blueprint, but starting last year in January, like I did, so far this year, you'd be on your 19th contract, and you would be averaging $6,667 an hour for the same 45.8 hours, just a little bit more money because, well, you're trading. Actually, and it's kind of odd. It doesn't work out exactly the same because it's sort of exponential the way it works. You know, we're at just a little more than double the contracts. This is 7 contracts, and this is 19 contracts. So it's almost 3 times the contracts. But the average hourly rate is quite a bit more. It's like almost 4 times as much. Well, it is 4 times as much. That's the whole idea. You get the goal for the day, you add contracts, and quit trading. Make your life a lot easier, and just go enjoy the rest of life. Do what you like to do. All right. So now we'll go back here to, well, now that we've done that, we'll go back here in the charts. So we'll just go over what we did. We didn't have much to do here on the YM today. Oops. We didn't have much to do here on the YM today, but we did have a couple of trades. I think 1 +5 and 1 -10. Get back to that. There's the -10, and there's the +5. So on this one right here, we picked up 5 ticks profit on that one. And then on this one right here, we had -10. That puts it -5 overall. -5 overall. Okay. And let me do that. And now that was the YM. Now during the day, the YM, we had a lot more trades on the YM. Like a nice blue arrow right there that worked out fine. A nice blue arrow here that worked out fine. Blue arrow there that worked out fine. Blue arrow here that worked out fine. Just again and again, these arrows are just killing it. And some of you guys may be curious what the scalper thing is down here. It's going to say take your range scalper PP. When I do finish it, it's going to be something where you just need to be with the trend and you can trade every pull out of the overbought. Right? That's the idea. When it's with the trend, every pull out of the overbought will be a trade. Right? And when it's with the trend going long, every pull out of the oversold will be a trade. Right? If it's with the trend going long. It'll be a super simple thing that I've been working on for a very long time. And if I can get it to work out the way that I want it to work out, it'll simplify a lot of your lives. And you can do it on whatever time frame you want, but it is called a range scalper. Oops. It's called a range scalper, which means it only works on range bars. All right. The code behind it requires a certain sequence of up closes and down closes to happen. Okay. All right. So on the Russell now, we didn't do anything with the Russell today, but we can take a look at it. Look at all of these. Look at all of these like no trade zones. There's so many today. There were some nice blue arrows in here. Now, I don't think we traded at all on the Russell today. I didn't write anything down, so I don't think we did a single trade on the Russell. We go look at what did trigger. All right. Started out right in here with nothing. Now, granted, you're only going to have blue and purple arrows here, but this blue arrow would have stopped out. This blue arrow would have been just enough to get the stop to break even. This would have given you some profit, but it went right into a zone. This would have given you a nice profit. I tried to get into that one, but it left me sitting there. And the next blue or purple arrow was way over here at 10:39. Great blue arrow right there. Another great blue arrow right there. Another one there. That would have been a break even for me. This one would have been a little bit of profit. This would have been a nice one right there. This would have been some kind of profit. This would have been a stop out. And now we're into the break anyway. During the break, not a lot was happening. Look at all those no trade zones during the break. Wow. It's like the market really wants to turn right here, is what that's suggesting. All right, the ES. Now we didn't trade the ES today either. All right. On the ES this morning and even last night, I was suggesting it was going to get up to this level right here, 631. I don't know if did it ever actually get up there. It got pretty close to it. Right there, 629. That was pretty close enough. When it started to slow down at the weekly trading zone, I thought it was really going to turn over right there. But turns out it didn't turn right there. It did turn for a little while, but it came back up and made another go at it. But as far as trades, I don't see a single blue arrow here. There's one purple arrow right there. Here's a blue arrow short right there. That was during the break. So we only had and that blue arrow right there. So that would have been a break even. That would have probably been a break even. So we hardly had anything to do today on the ES anyway. I wasn't really looking at it, but we hardly had anything to do. Now again, using this, it's an entry there, an entry there, an entry there, entry there, an entry there. This is the only one that wouldn't have worked out. And that's just in this little last span right here of the last half hour. Where you normally wouldn't have had, well, you would have had the blue arrow, then the purple arrow, and then the blue arrow. I guess there were some normal entries in there too. Stuff that should be coming your way once I test it out enough. And the NQ. So on the NQ today is where we have the majority of our trades, as it usually is. Go back to the beginning. Okay, got a lot of bars in here today. Wow, that was a lot. I feel like I've been holding this down forever. All right, here was our first trade of the morning, right here. And we got 36 profit. I took it on this right here, this arrow. Not before the arrows actually even triggered. I took it on this right here. And I picked up 36 profit on that. It almost stopped me out, but I picked up 36 profit on it. You can see there were a bunch more blue arrows in here, but I didn't trade. After this blue arrow, you need to have a higher swing before you could take that blue arrow. So this one was not a valid one. This one was. And hang on a second. Let me just do this. Okay. And yeah, so we had another trade right there that I could break even on. Let's scrunch this up a little bit. More blue arrows in there. Another trade right here. Now this one I kind of screwed up because I got 30 ticks profit. So after the first one, I got 30 ticks. And the next one there's another one in there that I missed where I got 30 ticks. And then this one I got 30 ticks to put me at 90, but then I screwed that up. And I got hit trying to get out of it. I accidentally put an order on there and it entered me the wrong way in the market. So when I tried to get out of this one, I actually put 2 orders on and entered me the wrong way in the market. So I ended up giving back 7 points. So I gave back 28 ticks right after that. So after this one here, I got ticks and went to 90. Then I got minus 28 ticks and went down to 62. That's more than my normal stop out. But then right here, I picked up 30 ticks to get me back up. Actually, it wasn't 30 ticks. I picked up 4 ticks to get me to 66. Then 30 ticks here to get me to 96. And see, there were a lot of opportunities in there. A lot of opportunities. And I don't know where I take my next one here, but we're getting to it, I'm pretty sure. I must have marked it. I think it was up in here somewhere. I took another 30 tick trade to get me to 126. But look at all these leg lengths right here. These are really beautiful leg lengths. And that's in tomorrow's lesson plan. For those of you guys that are in the trial right now, tomorrow's lesson plan, I go over the leg lengths. That should be a good lesson plan, I think, tomorrow. There was one fella who was in here yesterday who said he was going to be there in the morning today, but I don't think he made it, and he was on the trial. Yeah, this good reason to be a passport. Once I finally put it into once I tested it enough and used it enough and all that. All right. So during the break, let's see. During the break, there was a blue arrow there. I don't know where there's some other blue arrows I didn't even notice. I just probably drove right over. And there's a blue arrow there. That would have been okay. A blue arrow here, it would have been great. A blue arrow here, that would have stopped you out. A blue arrow here, that would have given you a break even, or given me a break even. And that was it. So there's a ton of opportunity today. A ton of opportunity today. And we ended up with plus 126 ticks on the NQ and minus 5 on the YM. All right, most of the trades that we took were on the NQ today, and that's not unusual. Most of the trades to be on the NQ. All right, let's see. I am looking for this over here. Okay, cancel. So now we'll get into the trading. All right. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. Arrow. Click on the purple button right there. There is no credit card required for the trial. All right. When you click on that, you will be brought to this registration page where all we ask for is your name, your email, and your phone number. Okay. Down here, name, email, phone number. And there's 5 multiple choice questions. And if you have an NinjaTrader machine ID, give us that. If you have a TradingView login ID, give us that. All right. If you have both, give us both, and we'll set you up with both of them. All right. That is what you need to do. All right. Get in there and give us that information, and then we'll enable all your indicators, so you can get indicating at the beginning of your trial. All right. Have all your stuff running for you at the beginning of your trial. All right. So the blue shaded areas are non-trading areas. Yeah, the blue shaded areas are no trade zones, Chris. And you determine how big those are going to be by setting the sensitivity in here. Input sensitivity is right up here at the top. The bigger this number, you have no trade zone. Like if I make this a 0.5, watch no trade zone there on the Russell. If I make this a 0.5, watch this is going to get huge. Eventually. There it is. Huge. Okay, so you determine how big that is. I have some preset ones that they're out here. If you go to mytradingiq.com and click on trade rules, right here at the top, these are all the sensitivities of the markets that we normally trade. That's what I suggest. Okay. But you can go in there and set it to whatever, whatever you're comfortable with. If mine are too conservative, you can make it smaller. If you don't want, if you want to get a trade like right in here, if you want to trigger a trade for you when it's like that, you can change that number to a smaller number and it'll reduce this to almost nothing. You want to have a no trade zone whenever you have a trend change, like this right here where it was going down and then it changed to bullish. See how the ribbon was going down and it switched to bullish. You want to have a trend. You want to have a no trade zone at every trend change. All right, and after the trend change, it should come out of the no trade zone and then pull back up and bounce off the BBC, bounce off the ribbon like that right there on the NQ. That's what you're looking for on every trade. All right, on every trade, once you get a trend change, it should go away from the ribbon, pull back to the ribbon, and bounce off the ribbon. This is a valid trade right now on the NQ. This is a ribbon trade right here. Now, you don't have any kind of an arrow because it didn't come out of the overbought. If we get a down close on this and it pulls it out of the overbought, then you will have an arrow. You'll have, right now, you have a green arrow because we hit the black line. Okay, so it's a valid trade. It's not the greatest trade, I'm going to say, because, well, it's a little choppy in here, but it's a valid trade. Okay, I didn't get it. I put it on too late. See, put it on too late. It would have just given me 30 ticks at $2,800 right there if I'd have gotten it, but I put it on too late. But that's exactly what you're looking for right there. Price to come back after you get the trend change like that. Price to pull away from the BBC, then pull back to the BBC, and the BBC holds. It's going to hold again right now, probably. Okay, and this again is what you're looking for. Now you're not going to be coming out of the overbought yet. If you get an up close on this, it might go into the overbought. But if you don't come out of the overbought on this and it hits the black line, you're not going to have any kind of an arrow. All right. See, I just barely hit the black line there, so it's not really a valid trade, but I took it anyway because I missed that last one. So I'm just going to lock in a point on this one. And this should give me all 30 ticks right here. It should. I'm going to lock in a lot more than one. It should give me all 30 ticks. There it is. Okay. Now you see how I had to cancel that order? When I screwed up today, I didn't cancel that order fast enough. I made it too close and I didn't cancel it fast enough. And it put me in on the wrong side. Put that. Now, I wasn't sure if it had actually hit the ribbon, hit the black line or not. That's what I was saying, that if it hit the black line, then it's not a valid trade. But if it didn't hit the black line, then it is. It was really close. And I had a feeling it was going to go anyway when we got this right here as well. I had a good feeling that was going to go too. All right. Same thing with this one back here. Good time to be a passport guy, isn't it, Chris? All right. So I missed that first one over here, but I did grab that one. And so I'm feeling pretty good about that. I mean, I'm doing well today anyway, so it doesn't really matter. I'm not really missing anything. If I don't end up getting in a trade, it's okay. All right, so we're testing the ribbon again right here. We're up here at 27.5 and testing the ribbon, and that was actually a trade. If it wasn't going into a weekly trading zone, that would have been a trade right there. That would have been something to go for if it wasn't going into the zone. Okay, and that's something that those of you guys who don't know, if you have the weekly trading zones on your charts, those weekly trading zones are awesome places for targets. Like this one right here, if I'd noticed the weekly trading zone down there, I might have put my target out further than 30 ticks. Okay. Now I don't have the YouTube thing running right here, so I don't know if anybody in YouTube is asking any questions or even watching, but I guess I'll put it on. Let me put it on here and see. YouTube. Okay. Here it is. And you shut off the audio on that. Okay, so I have it up so I can answer questions that might come up over there right now. And that started streaming 88 minutes ago. 88 minutes ago. All right, I'm gonna go here to this one. And all right. So right now, we're looking for the pullback here to test the ribbon on the NQ. Now, we have the weekly trading zone right here. It might get dragged right back down into the weekly trading zone. I kind of want to look at this on a bigger picture and see if we're just in a deep pullback on a bigger leg down, which is what I think it is. We'd be looking for an up close off of this. I kind of don't want to get it, but it's going to be 32.50 up to 36.50 is what you'd be buying on that. Okay, 32.50 up to 36.50, and I wish I would have had my order waiting there. It actually came back and got me, and it just took me out of break even. But if I had my order waiting there at 36.50, it ran from 36.50 right up to 42.50. So it ran 6 points, 24 ticks right away. Anyway, this blue arrow right here, if you didn't take this, you can take that. Now that was part of the lesson plan today. If you didn't take this, so it has to put in a higher swing, you can take this, but this has already gone 8 ticks into profit from 39. It's run up to 42.5. So it's already gone 8 ticks into profit. You can't take it now. If you didn't take it, you can't take it now. It's too late. It's already gone to where the stop and go to break even, right? That was all part of today's lesson plan. When you can take a trade, if you miss a trade and all that. If you get a blue arrow and that's way too close. It's 4, 8, and I went with 8. That kind of got messed up the way that order came together. That was part of today's stuff. But yes, expect a bounce. You see that one, both down. You see how this came before the black arrow on that right there. Anyway, looking back over here, nothing's happening. I guess nothing's gonna happen there. I don't know. So because you have this blue arrow, it's got to put in a higher swing before you can trade in that direction again. The outer bands are completely flat, so you're not going to want to do this green arrow right here. You leave that alone, right? All the outer bands are flat right now. On all the markets, the outer bands are completely flat. So we really don't have anything that we want to trade right now. We have 13 minutes left in here, guys. 13 minutes. Um, 13, 16. Okay. All right, so now we want to trend somewhere. You know what I haven't done in a long time, it seems like, is looked at Bitcoin. I have no idea what that guy's doing. Since our last blue arrow on Bitcoin was back here last week. And it's actually been making a pretty good run here. All right. And if you go back here and see how it did the last time, it did this, that, this, and that. So this, that, this, and that. So this should be the one that makes it. This should be the leg here that makes it. Okay. And up here is where it should make it up to. Not just because it's a prior swing high, but because it was an extension of a leg length. All right. So the last blue arrow here gave out all these targets. And it hasn't hit any of them yet. The first one is going to be 71.9 something. Probably right here. Yeah, this is the first target right here. 974, something like that. Bitcoin and Mr. was doing something today too. I got an alert on Mr. at some point today too. But let's go out here and look at this on this time frame. All right, look at the QQQ now. QQQ, and where is it priced right now? 481. How is that? Let's say a 30-minute. Okay, so the high of the day was 484, And 481 is where it's priced at right now. So again, the difference between options and micros. And the expiration date on that is killing the cost of the option. If you had it, the time decay is killing the cost of the option because it's taking forever to make the big move that I think it's going to make. Now we did put in a higher swing eventually over here, so this green arrow is okay to take right here. I didn't do it, but it's okay to take right there because we did eventually put in a higher swing. Every trade and every trade and every green or blue arrow has to put in a higher swing. Like this one right here has to get up above that swing level, that swing high right there. If it fails to get above the swing high, we will not have another trade in that direction. So whether you take it or not, every blue and green arrow and trade that you actually take has to continue the trend. They have to continue the trend to be able to continue trading in that direction. I went over that in a lot of detail this morning in the lesson plan this morning. How come you have to continue the trend? It's to stop you from getting, it's to prevent you from getting stopped out multiple times in a row in the same direction in the same market. Right? Because that is really a confidence killer if that happens to you. And again, you know, what we have is good. It's very good. And we give great entries and all that stuff. But you know, any kind of thing that you have that gives you a good entry, that gives you consistent profit, you just you have to have consistent risk management strategy. And that's part of it. Right? If you don't have a risk management strategy, then you don't have anything that's going to give you consistent results. I can tell you that right now. You're not going to get consistent results if you don't have a consistent risk management strategy. The only way to get consistent results is to do consistent things. Act consistently. Repeat the same thing again and again and again. Lose my voice. Kind of stinks. I need it later. All right, so we're looking for a pullback down here to test the ribbon. We haven't gotten it yet. We're pullback over here to test the ribbon. We haven't gotten that. On the ES, we're just going sideways here. The outer bands are completely flat. Okay, outer bands are completely flat on it. Now, if I put this on, say, bigger time frame, let's go on the 30 range. All right, good stuff. I was just curious. I hadn't looked at it on a larger time frame. I was actually looking at something else today too, or last night, I guess. Looking at trading the next contract. Because you know that there's no algorithms trading the next contract right now. That is not happening right now. And I did that earlier. I put a trade on. I'll show you. I put a trade on the MESZ just to test the theory. The MESZ with a 20 tick bracket. And I had gotten the signal and I put the 20 tick bracket on and I just let it go. And I made 25 bucks with one MESZ contract. I was curious how that was going to work out. I did that during the break. Just so you get an idea what that looks like. The MESZ looks like this. Right, so you get the same indications, it's really traded thin. You get all this big gap in here and stuff like that. It's traded really, really thin. Now that gap is actually, price actually moves inside that gap. But when you look at it on a DOM, let me see it. I don't know if I have it open on this computer. I don't think I do. You go in here and I'll open one up for you. It's just something I was curious about. When I looked at it by accident last night, and it got me to thinking, if I'm the only one trading it, then, and as long as I get the right indications. So here it is, I traded one of these MESZs this morning, and I made 25 bucks, and so 50-cent profit. That's 50-cent commission is what it costs. But you see how broken up it is in here, but still, it's the MESZ. So price is up here, and if I got an indication to go short, I would put it where it's supposed to be, a limit order where it's supposed to be, with a 20-tick bracket. And I know this is ugly, and the way it's all put together, it's ugly. But you can just put it on and not really pay that much attention to it, because it's not going to make much sense to you the way it's got all those empty spaces and blocks in there. But the signals are the signals. They work no matter what you do. Doesn't matter what symbol you put it on. This is the MESU, which is the current contract, the micros. And you get the same signals there. And if you were to just do the ESZ, which is the next contract for the Z, now if I had to put it on this one, if I had tested it on this one, which is a wise thing, if I had tested it on this one, I'd have been up 200 bucks instead of 20, right? 250 bucks instead of 24. But see, it gives the same signals, the same indications. It was just a thought I had last night that I wanted to try today. Yeah, I am satisfied with the result. Okay. It's now 1:26. We only have about 3.5, 4 minutes left here. We did put in a higher swing from this green arrow that I didn't take. I got a green arrow over here that I also did not take. And yeah. I mean, you guys have ever thought of doing that? Going to the next contract, like way early, like now. Let's go just enough volume to place a trade. You should use limit orders on everything. Okay. But I was surprised that it didn't slip well. It put me in right where I wanted to go in, and it took me out apparently right where I wanted to get out. I actually put that on and left it on. I put it on another computer during the break, and it hadn't finished yet. I was expecting it to stop out, but when I left it, it was down about 10 ticks. It apparently turned around and did what it should have done. All right, so over here on the on the Y, on the NQ right now, we're pulling back down to test the ribbon. All right, we're not in the oversold. Well, now we are. We're in the oversold now, so we could get an arrow on this. We get an up close on it. Right, from right here, because we hit the black line, it'd be a green arrow. 61.75 up to 65.75. Now it's probably not going to be anything. It's pulled back too deep. 60.50 up to 64.50. If it's going to be anything, it'd be 64.50 right now, but I don't think it's going to. And yeah, it's pulled back too deep. I'm just going to cancel the order on that. I will just cancel that order.
Everybody just wants to click the mouse and make money, and anybody can click a mouse.
Yes.
The important lesson here is exercising or developing patience and self-discipline required to be a successful trader. Just because you want to make money now does not mean whatever market you have in front of you is in a position to provide you with income now. So you have to be able to read the chart and the indicator set, and our indicator set is quite simple. And you have to wait for the proper setup to appear. Let the trade come to you and then execute without hesitation, without jumping the gun.
Again and again and again, over and over and over, doing the same thing.
You learn how to do one thing, and then you just do that one thing every single day.
That's all you need.
It will change your life.
You need one thing, and if you get that one thing, just do that one thing. You do that one thing every day. It'd be like, if you had this ATM that only you knew the password to, that was always full, you could always take some money out of. You're the only one who knows the password to it. You go there every day, do the same thing, enter the same password. But it limits you to the amount of money you can take out. Don't be greedy. You get greedy, then it starts taking money back from you. And that is the truth. All right.
Have you shown them how to take the free trial?
I have, but I'll show them again right now since I'm going to wrap it up. If you have not taken a free trial with us, go here to mytrade.com. Click on the purple button right here. When you click that purple button, you will be brought to this registration page where all we ask for is your name, your email, your phone number. There are 5 multiple choice questions. Into those, if you have an administrator, give us your machine ID. If you have TradingView, give us your login ID. That is all that you need to do, right? If you have an administrator, give us your machine ID. If you have TradingView, give us your login ID. That is all that you need to do. Okay. If you do that, then then you will have.
We'll get your indicators enabled today. Your trial will begin tomorrow and run through next Tuesday. The weekend will not count against you, even though there are markets that trade over.
That is true. Sunday night, I'm going to do what I did yesterday. Well, I guess on Sunday, I'll do it again. If I'm at my computer, I'll do it again on Sunday night. And if there's a gap on Sunday, then I'll put in some stuff to trade that gap, like I did this week, where there was a gap, and I offered up a possible entry point in the gap fill and what it should do after the gap fill, because I exited that trade today with, I don't remember how many points I entered it 56 and I exited it 620, whatever that is. But it was a good trade. It was a really good trade. It turned out really well. I'll do that again.
I shared a article this morning, and let me share it with you again real quick, because I think you can help. No, I just want to read this to you, then I'll take the charts. Okay. Oil fell for a third session as futures hit key technical levels, spurring a bout of algorithmic selling amid low summer liquidity. WTI dropped as much as 1.6% to trade near 77 a barrel, the lowest in 5 weeks. The decline was propelled by algorithmic traders dumping their bullish positions after futures surpassed both the 50-day and 100-day moving averages, which have been acting as support levels. Oil is approaching oversold territory on the 9-day relative strength index, suggesting a reversal may be imminent. So I thought perhaps you could point out to folks some potential option trades or some way to take advantage of an incoming rally on crude. I should have probably mentioned that at the top when you came on. If you want to just talk about it tomorrow, that's fine.
Well, we can talk about it tomorrow. I'll probably be a little better prepared to talk about it tomorrow. But let me just look at crude in here. GCLU, run the U contract, right? GCLU 24.
Yes.
I'm going to look at that on the 30-minute chart. Okay, yeah, so it's already hit the rally point right now on the 30-minute chart, but let's get on the bigger time frame than a 30-minute because it's got to be bouncing off something down there. Yeah, go here, custom and day time-based. There we go. All right, it's got to be bouncing off of something. Okay, so here's what it looks like it's doing. This one, right there at 50% retracement of this move up. That's where it's at right now, the 50% retracement of the move up, roughly. And so from here, a good bounce would be back up to the BBC, would be a good bounce. I mean, I know that's tiny and you guys can't see that. Let me blow it up. Whoa, that's too big. You can see too much of it. All right, that's about right. So a good bounce from here. Now this is the 50% mark right here. And a good bounce from here would, it's not that big really, from 77, 77, 77, looking at 77, 77. That's, anyway.
Prices should be heading back up to around the $90 level.
Yeah, what it should do, I would think, it's done a 50% retracement of the leg down, and the leg up should go from here to here. Is what the leg up should do. And so when it begins the leg up, this is what it should go up to right here. Using the price action, we have 87, 66, 88 right in that area. $90 level is what you were saying. That's what it should do when it starts to bounce. That's what it should do. It's gonna have some obstacles right up above it here. It's gonna hit. This is on a daily. It's gonna go through. It's gonna go through the. It's gonna go through the BBC and the black step line and the MA1. It's gonna get through all that. But as soon as it closes up above 80 on a daily, as soon as it closes up above 80, we should be off for another $10. Pretty quick, probably. I would imagine. That would be the key to wait for, the close above 80 on a daily. Then you can start buying some calls, because then it should run up to 88 pretty quick, is what I would think. Just my quick analysis.
All right, thanks.
As far as futures go, on a daily for a close above 80, that should do it. All right. So with that, I can pass back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. If you are ready.
I am. Recap of the morning session.
Today it took 7 minutes and 1 trade to get to $2,850.
Terrific Tuesday.
Cute, sure was. Hey, and before you go too much further, one of the things that I've been harping on since the weekend was, if that happens to happen, if the futures, if they get over that hump, in the off hours where you can't trade options, you can trade the micros.
That's true.
You can trade the micros on crude. That's what I was saying this past, starting on Sunday is what I was saying, because Sunday night we had a great opportunity if we had options to buy calls, but without the ability to do that, you can buy micros with the same amount of risk, except you don't have the time decay. You can hold on to them for a couple of days without worrying about getting closer to the expiration date. Okay, so the same thing applies to the crude. You can do the micros on the crude instead of options on the crude. All right, just a thought.
Guys, in this chart, you can see that since the broadcast started, we've come down 1, 2, 3 times on the 30-minute chart. So that's an hour and a half, where the previous bullish cross provided support. That's been the support level all day, or since about 8 o'clock this morning, when we hit the long target and retraced. Resistance always leads to support. Support always leads to resistance. Back to support. Back to resistance. Back to support. We now have red and falling overhead. Now look what happened last night when the session began and blue and climbing turned to red and falling. Took us all the way down to the zone. We now have a similar scenario. Blue and climbing has turned to red and falling. So we need to take out this area right here. Okay, so 97 to 95, that would just give you your goal for the day, but you could actually go 99 to 95. That would be 4 points. Okay, Michael, I know I just kind of went rambling there, so I don't know if you've already hung up and moved on. If so, have a great day. If you're still there, a comment, go ahead. All right, guys, I've already covered the ES, so for the sake of time, let's get cooking. The Dow, flat, 2 days in a row. Okay, here's where we opened last night. Drop to support. Remember, when price hits a weekly trading zone, 70% of the time you're going to get consolidation. 20% of the time rejection, 10% of the time the slice. Price gets above the BVC, okay? So now we're expecting higher prices, right? So where do we go? To the target, which is based off yesterday's high. There's our resistance. What's resistance going to do? Send us back to support, which will send us back to resistance, which will send us back to support, back to resistance, back to support. But this is starting to look a little weak. So, I'll let price from 95, from 40. You know what? I don't think I would trade the Dow today. I really don't. This is just not showing us anything that is appealing. I only place a trade when I see something that I can't stop myself from trading. It has to be, as Bert puts it, that clear and obvious, or whatever it is he says. Let's go to the Russell. Okay, here's where we opened last night. Remember that vertical line separates today, Tuesday, from Monday. Back over here is Friday, Thursday. These zones that you see became valid Monday morning at 6:15 a.m. Eastern. That's when the new zones are published for the week. Once they're published, they're carved in stone the entire week. When price rallies up to a zone, we expect resistance. This is what rejection looks like. So we come back down to this zone, which we expect to be support. Support sends the market looking for resistance, which it found at the zone. Here's the open last night. We attempted higher. We didn't move enough to get your goal for the day. Then price dropped so that blue and climbing is directly above price, which is an indication that blue and climbing is going to turn to red and falling. And so what does price do? It walks right back to the BVC. What do we know about that? The pullback holds more often than not. Support sent us to resistance at the target. Resistance sent us to support. See this 3-candle pattern from yesterday? And if you stretch it all the way back to Friday, see that high right there? That's that low right there. Okay. Support will send the market for resistance. And this is Tuesday, Monday, Friday, last Thursday. See that high right there? Last Thursday? It's today's high. You got to learn to read the chart, to read price action. Only after you learn to read the chart can you truly learn how to trade. Now, you can pull the trigger when somebody says it's time to pull the trigger. That's not the point. You want to become self-sufficient. If your goal is to trade for a living, that'll never happen as long as you're dependent upon somebody else to tell you when to get in and when to get out. Okay? You've got to learn to see it for yourself. Now, the Russell just had a nice run up. You understand, last Thursday created this high. The step line is crossing blue and climbing. So what does that mean? That price will most likely drop to the BVC. Now the pullback holds more often than not. So if the pullback holds, then we'll have more opportunity on the upside. If the pullback doesn't hold, then you've got potential support here at the zone and the bullish cross. Okay. Let price get below all this noise, and then you could comfortably trade 22.31, 22.27. Yeah, that's 4 points, $50 a point, $200 per contract traded. What if price takes out this high? Well, you got to go see what other resistance is there. The market has a memory. Okay. NQ. Pretty quiet day for the NQ. Here's where we opened last night. Blue and climbing was directly above price. So we expect resistance. See how blue and climbing turned to red and falling? Walked us right down to the zone where we consolidated, as we do 70% of the time. And we got a leg and a retracement, and a leg and a retracement, and a leg. Hit the target. Resistance is going to send the market looking for support, which it has found at the zone. Crude oil. Here's where we opened last night. We got above the BBC, and we hit the target. It only takes 10 ticks to get you go for the day. So from 78.35 to 78.55, that one candle there, $200 per contract traded. Resistance sends us to support, sends us to resistance. Then we drop. Blue and climbing turns to red and falling. We get a bearish cross. That's when the red line gets below the green line. Look what happened the last time the red line got below the green line. 1, 2, 3 days. Then at this zone, we got a bounce yesterday. The VBC pullback held for hours. Grueling. Now look where we are. Step line has crossed red and falling. Price has attempted to retrace to the BBC, but it's got to overcome the zone first. Price is below the zone, and the zone becomes resistance. When price is above the zone, then the zone is support. Okay, see, support, 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 until it finally gave way. So you've got some conflicting things here. Step line crossed. Red and falling looks like it wants to curl up and become blue and climbing. As this candle drops, look for potential support at 76.88. Okay, that's where the step line is. That support should send us up to the BBC. And if the pull up holds, then we'll have more trades to the downside. The lowest weekly zone this week is at 73.90/95. I'll be surprised if we don't pull back to the BBC. Stranger things have happened. Gold. Here's where we opened last night. Dropped to the BBC. The pullback held. And we came just a few ticks shy of the target. This candle opened at 24.01 and it ran up $400 per contract traded. Resistance sent us to support. Support sent us to resistance. Resistance sent us to support. And now gold is just kind of duking it out. Okay. BBC support, red and falling resistance. And right here, you see these tails? See this bullish cross where the blue line got above the green line? You want to make sure you let price get below that bullish cross and below that low right there. Okay. Sell 23.96 down to 23.94. $200 per contract traded. If there's momentum, let it keep running. I mean, price has already been to 23.90 during this session. So there's no reason it can't go back there again and further. Silver. Here's where we opened last night. Dropped to the BBC, the pullback held, and bang, we hit the target. Now, why did price stop climbing? Previous bearish cross. Resistance. Send the market looking for support, which it found at the zone and consolidated, or at the short target and the zone where it consolidated. Then it continued dropping to the next zone, support. That's going to go send the market looking for resistance. So we get a leg, a retracement, and a leg. So we've hit the long target twice, the short target once. Here, that's not a trade that I would take because, or that I would teach you to take. That's a counter trend trade. In the Logic 247 channel, there's over 17,200 individual handcrafted alerts. Every single one of them is a trend trade as defined by the 30-minute chart, price, and the BBC. Once you master trend trading, if you want to learn counter trend trading, I will teach you, but I'll never put a counter trend trade in the Logic channel because a counter trend trade does not have the same high probability, low risk characteristics as a trend trade. It's like swimming downstream or upstream. Euro, last market. Here's where we opened last night, right at the zone. We dropped to the BBC, which gave support and sent us right up to the long target. Resistance. Send the market looking for support, which it found at the zone, consolidated, reached up to red and falling, resistance, sent it down to the next zone. Now you see how this candle sliced through the zone like it wasn't even there? The 30-minute chart, 30-minute candle. When it ran out of steam, what did it do? It retraced to the zone it sliced through, and then it continued in the direction of the slice. Trade every market exactly the same. Still got that doji going on, showing a little bit of green. This 38% fib extension has served as good resistance, and our support is the daily BBC. And price is trapped in between resistance and support. To become a member, go to mytradingiq.com. If there's not a buy button on the home page, call 949-42 Emini. And if you don't get a live person, if you get voicemail, leave your name, leave your phone number, and say, I would like to become a member, and someone will get back with you. You can also send an email to support@cfrn.net. And in the subject line, I would like to become a member. Someone will then email you a link where you can get all signed up. And then once you're signed up, Valerie will send you several very important emails. Don't lose them, okay? Create a folder on your computer. Call it CFRN, call it My Trading IQ, whatever you want to call it. Those emails that you get from Valerie after you sign up, put them in that folder because you're going to need them. There's links to the various Telegram channels. There's all kinds of information. A week from now, you'll be screaming, I can't find this and I can't do that. She sends you everything you need. But if you'd call us or send us an email and say, hey, I can't find so-and-so or blah, 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 and then we'll send it to you again, okay? So, I'm just saying, get out in front of it. 9 out of 10 traders fail because they don't have a teacher. Remember, you got to learn how to read before you can learn how to trade. 9 out of 10. Boy, that's a high washout rate. Navy SEALs don't have that high a washout rate. And that is arguably the toughest job on the planet. Now, Futures Magazine wrote this article in 2006. Analysts say that the statistics have only gotten worse as more of these fly-by-night shops pop up. You know, it's like whack-a-mole. You whack one, not NAFTA, the NFA whacks one down and then another one pops up. Okay, it's just bizarro land out there. We've been around since 2005. Our live training room has been in its current incarnation since 2008. We show up every day. 2 hours of live training in an interactive environment. Your questions are not an interruption of the process. Questions are the purpose of the process. That's how you learn. How many times have you been reading a book about trading or watching a video about trading and you're like, man, I wish I could ask the author a question about what he just said or just wrote because I can't quite wrap my mind around it. Live training room, 2 hours every trading day. Now, does the passport guarantee you'll become the 1 out of 10 who succeeds? Nope. We're going to give you the information you need to succeed. We're going to give you the tools you need to succeed. What you do with them, we have no control over. Are you going to follow all the rules? Are you going to use everything the way it's supposed to be used? Are you going to learn to exercise discipline and self-control? These are things we don't have control over. But I can promise you, there'll always be somebody to help you when you need help. Passport holders get around-the-clock support via Telegram. You become a passport holder, you get the golden key that unlocks all the private channels in Telegram. Now, when you become a member, you're paying for the software, paying for the training, paying for the one-on-one mentoring, indicators, strategy, Logic 247 alerts, concierge trade alerts, daily trading zones, Thursday night members only workshop. What you're not paying for is the Telegram discussion group. It is a value-added service that we provide to our traders. It is a family-friendly environment. 99.99% of our traders are very happy campers. If you misbehave in the discussion group after you've been warned and possibly suspended, you're going to get banned. This is such a valuable asset, and it's 100% free. You can't buy it. Because if you paid for it, then we'd have to let you in. But you don't pay for it. It's all spelled out in our terms of service, which you have to read before you can even become a member. One-on-one private mentoring, the strategy, which is fluid across all markets and all time frames. Same with the indicators. Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and the members only workshop on Thursday night. All of that is yours when you become a passport holder. If you want to have a one-on-one mentoring session before you become a member, we do that as well. Just got to let us know. Let's wrap it up with our good word for the day. Yesterday we talked about onwards and upwards. Today's good word for the day Theory or Truth, Part 1. 1 Thessalonians 4:14. We believe that Jesus died and rose again. Let's look at some theories peddled by those who've tried to deny the resurrection. Some say that the Gospels were written 200 to 300 years after the event, so the story was either falsified or embellished. But archaeology disproves that. Now we know that the Gospels go back to the authors whose names they bear, and that the testimony of the resurrection goes back to the same decade in which it took place, not centuries later. So there was no time for legend to develop. Some say that the disciples experienced visions or hallucinations because Christ promised to rise from the dead, and they fully expected him to. But in the history of hallucinations, there is no incident where 500 people from different backgrounds, believers and non-believers, saw the same vision at the same time. And what about the two disciples on the Emmaus Road who walked and talked with Christ after his resurrection, then ate supper with him? Luke 24:13. Were they also hallucinating? When Peter preached on the day of Pentecost about this so-called great hallucination, he was standing only 10 minutes away from the tomb where Jesus was buried. Acts 2:24. On that one day, thousands of people believed. Others heard it and did not believe. Did no one think of walking down the street to check it out? Certainly those conspiring Sadducees would have taken every opportunity to show that this was simply a hallucination. The resurrection is what distinguishes Christianity from every other belief system in history. In it is the hope, not just of our souls lasting beyond death, but of our bodies returning to life, having overcome the last enemy, death, just as Jesus did. That's our good word for today. I'll be back with part 2 tomorrow. Thanks so much for tuning in. Whoever you are, wherever you are. May God continue to richly bless you with His mercy, with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.